Here are the closing bells, a little early for the end of the trading day. At the NASDAQ, move for hunger ringing the closing bell. And in New York, it's the New York Stock Exchange facilities team ringing the bell. You're watching the close on BNN Bloomberg. I'm Morella Fernandez. Christmas Eve, markets have closed a little early. Here's how we ended the day. After a couple of record closes for the TSX at the start of the week, it is down almost 59 points today, so no new record close as the TSX heads into a couple of off days for Christmas. The S&P 500 not on material gain today, just 22 points, and the NASDAQ has a 51-point move up, or 0.2%. The movers in Toronto are movers, but not moving by too much. Celestica at the top here, it's up 1.7%. That is a gain of $7.11, taking each share price to $422.88. Let's move on to Cargojet. Cargojet moving up 1.6%. It's actually down over the year almost or just over 18%, but a gain today that takes it to $85.35. Brookfield Business Partners, the next mover here, it's up over 2%. That's a move up of $1, taking it to $49.72, and it's up almost 54% on the year. On the flip side, Perpetua Resources is down today 4.3%. It's up 137% on the year, but a drop today of $1.64 a share. Seabridge Gold also moving today. It is down at 2.6%, even though gold has been gaining today. But it is 150% up on the years, 42.28, where it settled today. And then G Mining Ventures also down on the day, losing $1.02 per share, a 2.3% drop on the day for G Mining Ventures. Let's get to the stories we have been following in the BNN Bloomberg newsroom. Factory activity in Canada continued to retreat last month. A flash estimate from StatsCan indicates manufacturing shipment declined about 1.1% in November, month over month, driven by large decreases in transportation equipment and food. The decline would build on the 1% drop in October, which included weakness in chemicals and a sharp pullback in shipments of wood products. BP has agreed to sell a majority stake in its Castrol's lubricants division to U.S. investment firm Stone Peak Partners as the oil and gas company seeks to reduce debt and reset its business. The UK energy giant will raise about $6 billion from the sale of a 65% interest. Earlier in the year, BP overhauled its strategy to pull back from renewables and focus on its core business. Up next, we talk about how the S&P 500 performed in 2025 and what to expect in the coming year. Back in a moment. The S&P is up more than 17% this year. Our next guest says history recommends buying winners after an up year. Let's go to Sam Stovall. He's Chief Investment Strategist, CFRA Research. Thanks for joining us today.
Good to talk to you, Morella. Happy holidays.
Same to you. Let's start for a moment talking about the strength in GDP for the U.S. The most recent data was strong. Has this affected your anticipation of a rate cut for next year?
Well, we still believe that we're going to see two cuts, one in the first half and another in the second half. I think what it's done, though, is it's pushed the first cut into maybe the April timeframe, pretty much squashing any possibility of a cut at the January meeting. So I think what really will be driving things is if we do get the decline in year-on-year core PCE continuing to the 2.2% level that we're expecting, and if we end up seeing unemployment hovering around the 4.5% level for much of 2026, that could allow for the Fed to cut rates twice. So we'll see what happens.
Okay. Can you give me some perspective on the gains for the S&P? How did it do this year compared to last? And what does history dictate for next year?
Sure. Well, right now we're almost up 18%, and with four more trading days ahead of us, we could end up topping that 20% level once again, which would be a third consecutive year of doing so. It is certainly a three-peat or three successive years of double-digit gains. And the likelihood is not with us that we could see a fourth year, because going all the way back to World War II, we have only seen one five-peat and one four-peat. So this three-peat probably won't end up being double digits next year, but I do see it being higher and anticipate a year-end target of 7,400, which would be a mid to high single-digit price gain in that midterm election year.
Okay, let's talk about winners and losers, because I'm sure investors, as they sort of reset for 2026, think, do I carry through the stocks that have won this year? Do we expect them to continue winning? I know that's sort of a question that is quite wide, but how would you advise?
Sure. Well, I frequently get a question, should I buy last year's winners or buy last year's losers? Buy low, sell high. Well, if last year was a down year, you would want to buy last year's losers. If, however, last year was an up year, as it looks like it will be, you want to stick with this year's winners. Since 1990, using this alternating approach, by owning the three best or three worst sectors, if last year was up or down, you would have beaten the market by about 300 basis points per year and would have outperformed the market 71% of the time. Obviously not a guarantee, but it does indicate that if something is doing well, it usually ends up continuing to do well into the coming year.
Okay, so let's dive down a little bit more into sectors. What are the sectors you see being on the winning side next year?
Well, right now it's communication services, it is information technology and industrials. We also favor financials, which just happens to be number 4 at this point. Our belief is that we're going to be looking at about 14% earnings growth for the S&P 500 in 2026 and nearly 15% earnings growth in 2027. And in 2027, all but two sectors are expected to show double-digit gains. So even though we are trading at lofty valuations right now, I think investors are discounting the possibility that we do see an improvement in earnings over the next 2 years.
Okay, I do want to get into a couple of your stock picks along those lines. GE Vernova is the first one. What do you like about GE moving into 2026?
Well, it is a stock that is best positioned, according to our analysts, in the electrical equipment area that should benefit from the secular tailwinds of reshoring, as well as the rising electricity demand, basically supporting the trends that we've been seeing in data centers, AI, and in manufacturing.
Okay, so that's GE Vernova. What about Lam Research? What are they going to benefit from in 2026?
Well, this semiconductor equipment company is a key beneficiary of the trend of rising chip and package complexity. We think it should end up benefiting quite a bit by offering persistent storage without constant power. An evolving requirement for the semiconductor chips today.
Is that something you've already bought into?
Is it something that I personally have bought into, or that the company?
That the company had bought into.
Well, obviously, if we have a buy recommendation on the stock, also from a technical perspective, a couple of years ago, CFRA purchased Lowry Research, which is a well-known technical analysis firm. I like to look at both fundamentals and technicals, and we are positive on both.
Okay, let's get to your third pick, which is a well-known name, Alphabet. Google, of course, the parent company is Alphabet. What do you like about this company compared to the others in that big Mag 7 batch?
Well, it is in the communications services category. The other two were in tech and in industrials. Our buy recommendation really reflects the view of valuation, the free cash flow potential, and our belief that Google will be able to sustain anywhere from 11 to 14% revenue growth through 2027, underpinned by AI and cloud prospects. So I think basically it's playing catch up in some ways with some of the competitors, and therefore you could say that it is not rising on stretched valuations at this point.
Got it. Sam Stovall, going to leave it there, sir. Happy holidays to you. Thanks very much for joining us today.
My pleasure. Thanks for having me.
Donald Trump's trade policies left China's factory owners and workers scrambling to adjust. A Bloomberg Doc team brings you more on the impact in just a moment. Trump's trade policies have left China's factory owners and workers scrambling to adjust and consider new markets. But will any of them actually move production to the U.S.? This Bloomberg Doc dove deeper.
Navigating high-risk environments when you can't see what's ahead is no mean feat. But it's the kind of uncertainty Donald Trump's trade actions have forced on China's factory workers.
President Trump ramping up trade tensions again.
The word tariff, music to my ears.
So we're in the realm of just endless tit for tat.
This just kind of indicates how much of a moving target this has really become.
At stake is hundreds of billions of dollars in bilateral trade and access to the world's single largest consumer market, backed by American spending power.
This trade war basically leaves no one untouched, whether that's investors, business people, or officials in any country.
It just seems like every manufacturer in China realizes that they need to have strategies in case things get worse.
Two things are becoming clear, though. One, that finding a replacement for the mighty US consumer is as essential as it is difficult. And two, that despite all the tariff chaos, Chinese manufacturers aren't rushing to shift production into the US.
Americans don't want to make spatulas. They want to eat hamburgers. And I don't mean that in a negative way. I want to eat hamburgers too. But I'm here in China making the spatulas to do it. Americans don't want these jobs. And to think that manufacturing would go back to the United States is a farce.
Chinese manufacturers have had to get used to living with uncertainty.
They're not looking at their strategy 5, 10 years down the line. They're looking to keep their factories open for the next few months.
And that's costing money and clients.
Typically, we'll do about 150 to 160 million in revenue. This year, we're down about 20%. Our customers are essentially on pause.
Even exporters of incense destined for yoga studios, people you'd expect to be pretty zen, are fretting over demand.
12月份到5月份这个期间呢，我们所有的工厂的这个生产是停滞，然后我们的所有的人力成本还需要去做额外的一些支付。
You probably know why.
We really need to change the way trade works around the world.
We basically saw in April that the U.S. and China traded these tit-for-tat tariff hikes, which raised tariffs up to 145% for Chinese goods going to the U.S. and 125% for U.S. goods coming to China. In mid-May, we saw those tariffs reduced.
Still, Trump continues to make threats, including against countries that help China sidestep tariffs. Trade between the two nations has risen steadily for the last 25 years.
We're looking at basically $600 billion worth of goods traded between the two nations last year.
And with that has come a ballooning trade deficit. In 2024, the US imported nearly $439 billion worth of goods from China. But US exports to China totaled little more than $143 billion. That's about a $295 billion difference or trade deficit.
One country actually said to me, I was amazed that we were able to get away with it for this long.
While the US administration argues tariffs are the best way to address trade imbalances.
Chinese manufacturers, they don't understand why the U.S. is doing this. For a lot of Chinese exporters, it's going to be a lot more costly, a lot more difficult to sell to the U.S. market going forward.
The concern is that companies that will no longer have access to their biggest export market will then need to cut prices, let go of people, there'll be lower wages, and that's going to dampen consumer sentiment. Consumer confidence in China is already at historic lows because of this prolonged property crisis where a lot of wealth is tied up.
Despite all the uncertainty, the latest data shows China's economy appears to have held up, despite a slump in trade with the US. China's gross domestic product expanded by a better-than-expected 5.2% during the second quarter of the year. While exports to the US fell 24% in the second quarter, China's overall exports rose over 6% during the same period. But the country is facing persistent deflation, meaning companies are earning less money and making them more reluctant to invest and hire.
Although China has signaled this intention to shift to a more consumer-driven economy, it still really depends on its manufacturing sector to be able to meet its growth targets.
As uncertainty around Trump's tariff plans persist, manufacturers, workers, and their families are stuck in limbo and bracing for the worst.
Although Chinese exports to the U.S. account for something like 3% of GDP, once you take into the secondary effect, the loss of jobs, lower wages, potentially price cuts to get rid of inventory, then we're looking at a much worse situation and potentially a deflationary spiral.
And so, with Trump's trade assault whipsawing relations between the world's biggest economies, China's manufacturers are grappling for options. For one thing, US businesses and distributors who buy goods manufactured in China need time to plan orders. At Velong Enterprises, a manufacturer in Guangdong, Jacob Rothman says this hasn't been possible.
这个有点刮伤了。
等一下我们留意一下了哈。
好吧。There are buying cycles, and they only happen once a year. And shipping for those categories, no matter what it is, are regimented to those shipping cycles.
On again, off again US policy has been confusing too. Trump's 90-day delay following his so-called Liberation Day tariffs didn't help companies like Jacobs.
He was saying how his staff let out a big cheer when they heard about the reduction. Later that evening, his U.S. customers called him and said they were still upset.
They didn't know where to place their orders because we're too late for the previous season that they missed product for and too early for the next season. So where do they place their orders?
About 700 miles to the west, outside the city of Kunming, Jonathan Wang runs Shantyvale, an incense brand. The family business has been producing their products by hand for more than a decade.
They have their own workshop, their own farm, and over the last year or so, Jonathan has decided to export to the U.S.
本来我们是预计今年年初的时候就想进入到美国市场的，但是由于特朗普政府然后的关税政策不断的变化，我们一直往后延期。关税开始有一些变化的时候，我们就开始故意放缓了我们出口的这个脚步。那么包括工厂这边的产能，我们也是做了这个调整，然后不要那么多。
He was also hit by Trump's closure of the de minimis tariff loophole, a Latin term meaning too small to matter. It lets more businesses ship low-value packages duty-free.
那么在小包裹的这个政策，然后取消了以后，然后开始慢慢的有更多的关税的新闻出来以后，我们会发现说，我们没有办法在小包裹的这个运输上面去留给我们自己足够的利润空间。
In an effort to sidestep the evolving tariffs, many companies in mainland China have adopted a so-called China Plus One model. India and Southeast Asia have benefited in particular.
Our first factory outside of China was in Cambodia, and it was during President Trump's first term. And it was really to test if we could project our manufacturing beyond China. Since 70% of our goods go to the United States, we did have to, of course, make cuts to our manufacturing staff.
We've seen a pretty big exodus to Southeast Asia to take advantage of those lower labor costs, but also for the proximity to Chinese raw materials.
We have no choice. So even within this year, our Cambodian factory doubled in size. So did our factory outside of Delhi. And our factory outside of Mumbai is adding new manufacturing space now.
We've already seen exporters look to emerging markets or other developed markets for those goods that they're no longer able to sell to the U.S.
30% of our volume is going to Europe. Presumably, we could say, well, let's stop US business, right? Let's focus on Europe. But then you have every single company and manufacturing firm focusing on a smaller market. Competition becomes even more fierce for Europe.
我们的确有考虑过要放弃美国市场，然后看是否转战欧洲或者东南亚市场。但是我们会发现，欧洲那一边它其实市场已经相对成熟了，它有自己比较丰富的一些香薰产品。
It's very hard to replace the U.S. consumer. It's the biggest market, and the American consumers are very open to new ideas and trying new trends.
There's just no way that China can fill that volume of exports quickly, whether it's emerging markets or developed countries. But in the long term, they're hoping that these emerging markets will provide a way out.
There's no quick replacement for the US market. The spending power of the US consumer is so strong, even with tariffs, Chinese companies are not wholly scared off. Instead, it's about managing an uncertain relationship and planning for the worst.
So the conversations in Beijing, whether it's among officials, business people, academics, it's not really about how to rebuild the relationship with the US. It's about managing the decoupling and how to do it in the least painful way possible.
Coming up next, we look at how a theater graduate created a Canadian cookie empire. Back in a moment. Here are the stories we are following in the newsroom today. Gold rose to an all-time high, above $4,500 US an ounce. Escalating tension in Venezuela, where the U.S. has blocked oil tankers, and expectations for more rate cuts from the U.S. Federal Reserve have added to the metal's appeal. Gold has gained almost 70% this year and is on track for its best annual performance in 1979. Silver and platinum have also climbed to new records. Copper's headed for an annual gain of about 40%. Shares of sportswear giant Nike getting a boost. Filings show Apple CEO Tim Cook doubled his personal stake in the company and purchased about $3 million worth of shares. Cook is Nike's lead independent director. He served as director since 2005. Nike shares have been under pressure after it warned sales will decline in the current quarter. There's weakness in China and with its Converse brand. Shares of Intel edging lower after a report from Reuters that NVIDIA stopped a test to use its production process to make advanced chips. That report says NVIDIA recently tested a so-called 18A process, but then stopped the testing. In September, NVIDIA agreed to invest $5 billion in Intel after the U.S. government took a 10% stake. Shares of Dynavax Technologies are soaring. Sanofi has agreed to buy the drug manufacturer for about $2.2 billion U.S. as it seeks to expand its vaccines business. The deal gives Sanofi a hepatitis B vaccine that's already marketed in the U.S., as well as an experimental shingles vaccine. This comes as Sanofi continues to face challenges, including a rejection from the U.S. Food and Drug Administration and a decline in global vaccine rates. Christmas Eve means we are getting ready to leave out the milk and cookies for Santa Claus tonight. And of course, today we spoke to Craig Pike, he's owner of Craig's Cookies, to discuss how he spent a decade creating his cookie empire. And we kick things off with where he got his start.
Well, I thought I would maybe sell cookies to my friends on my bike. It's my mom's recipe. And so I hopped on social media, said, does anybody want a cookie? Somebody did. I biked them over to Parkdale in Toronto and sold about 200 dozen cookies that first month, just kind of popping around. And then for the next 5 years, I just kind of did that and then opened my first bricks and mortar in 2018. And now we have 23 locations across Canada.
They're all but one are in Ontario. You've got one in St. John's, Newfoundland, where you have roots.
I'm from Newfoundland, so we have one in St. John's. We just opened in Calgary about 2 weeks ago, and we're set to open in Halifax early 2026.
So what's different about your cookies? I know you're going to say they're the best in the world, but what's distinctive about them?
Well, they are the best in the world, but it's my mom's recipe, so it's homegrown. And what I did is I started putting little chocolate bars, like my favorite chocolate bars, inside the cookie. So it started with an Oreo actually, and then like a Mars bar, peanut butter cup, Twix bars, and now we'll put anything in a cookie. We've put chicken nuggets in cookies, pizza. Yeah, absolutely. It was a huge hit at the CNE last summer. You dipped it in barbecue sauce. So kind of the world is our oyster, or the world is our cookie when it comes to flavors and what we put inside those little beautiful biscuits.
Now, I believe you have about 14 franchisees and about 7 corporate stores. I mean, my numbers may be a little low there, but so you have both. Your model has both formats.
Yes, exactly. During COVID, we saw growth within the company. Everybody wanted to send folks sweet little treats, and then I saw that as an opportunity, that growth, to be able to expand the business, and we decided to go down a franchising model.
Steve Rolls, do you have a question for Craig?
Yeah, hi, Craig. Great to meet you. Yeah, and have been to the new store in Calgary on 17th, and fantastic, great location, and great success. You can do very well there. I have a question. You're just talking about franchise, and I have a few clients who have some franchise businesses, and maybe you could just expand on your model for franchise, and second part, maybe describe how the franchise model for in Canada and how strong it is.
Yeah, I think there's a lot of growth right now within Canadian businesses and Canadian-grown businesses. I think what's happening internationally has had the consumer really reflect on where they're spending their money, and we're seeing so much support for our business, being a Canadian business. Within the franchising model, I really love giving folks the opportunity to be able to also now run their own businesses. For me, one of the most important parts, obviously, we want to work with people that have strong business acumen, but also that have strong ethics and strong morals, and within capitalism in a way. I think because I come from the arts, it's really important for me to be able to offer really great spaces for people to work. We offer benefits, we offer GRSP programs, and really great incentives for people to work at Craig's Cookies. And then me, as a member of the queer community, it's important to be also like socially active within our communities. So that's a really important, like I said, component as far as when I'm meeting potential franchisees and where we open. So if kind of the measure of growth is quality over quantity in a way.
Yeah, that makes a lot of sense, and it's really seems like you're really dedicated to creating a culture, which is everything. So if I go to the one in Calgary, or go to in Toronto, I'm getting the same type of service. But one other question, just whenever I talk to successful entrepreneurs, is what was your greatest failure, and what did you learn from it, and how did it make you successful?
I think my greatest failure happened actually when I was an actor that I was able to bring into business. I was so afraid of listening, and I was so afraid of being my authentic self within the craft of acting. And I remember I did a play back at the Shaw Festival years ago where I was really challenged to think outside the box and not be afraid to say, hey, I don't know what I'm doing right now, and then rely and and receive support from people that are better than me. So I was able to learn that before I even opened Craig's Cookies. So since starting Craig's Cookies, I've really, really relied on people that are smarter than me. I didn't go to business school. I didn't go to baking school. And so what I've learned is literally from people that are smarter than me, and to be all right with saying, I don't know. And then educating yourself and learning about what you may not know about. That's an important component to it. And also really, really deeply listening to people. And trying your best to be able to meet their needs, whether or not that's an employee or somebody that comes in and they're like, hey, do you have this, like my favorite cookie is Nutella, and if we don't have it, it's really important as we grow, when you talk about franchisees, it can be, you can lose control over your business quite quickly, and how to hold on to that kind of small mom and pop feel. So if somebody comes in and we don't have a cookie that they really want, let's take the time and effort to make sure that the guest gets an hospitable and really careful experience when they come into our stores. I think hospitality is so important. I guess that's the Newfoundlander in me, and to try to put that first and foremost is also really something that we strive for.
Craig, I always admire independent business people. How do you handle the red tape and the bureaucracy between worker safety and I know it's important, but revenue agency, health and safety? Does it not drive you up the wall, all the form filling?
You know, it's a really important part of the process. It is also, I think, we are living at a time where things have changed. The workforce has changed. I think so. That can be challenging. I have a very great therapist who helps me through a lot of that, and really great team members that support that as well. You know, and like I said, when we offered our benefits program, it was really important that a component of that was for mental health. So yeah, it can be challenging. It's definitely different from what I'm really good at, which is pretending to be other people in the arts and being an actor and a musician. But you know, it's one day at a time. And like I said, it's really about just listening and staying calm.
Craig Pike is the owner of Craig's Cookies. Coming up after the break, a Canadian small business makes dolls catering to different cultural backgrounds. We'll take a look at those when we come back. If you are out doing some holiday shopping, I know some of you still are, our next guest creates dolls showcasing a diverse range of cultural backgrounds, very reflective of this country. Let's get more from Samantha Ong. She's founder and CEO of Joey Dolls. Thanks for coming in.
Thank you for having me.
Okay, so we've got the dolls set up here, and I want you to first give me an understanding of what led you to create this line.
Yeah, so growing up as a minority, I rarely saw myself in toys or media. And as I had my daughter, especially during the pandemic, she was around 1 year old at the time, I realized that I didn't want her to relive the experiences that I did and knowing the shame of how I felt growing up being Asian. And so I really wanted her to feel seen and proud of who she is. And that's why I decided to create dolls so that she could see herself and feel comforted by that and really connect to her culture at an early age.
Did you have any background in this?
No, not at all. Okay. Yeah, it's actually funny because I was actually a wedding photographer and then the pandemic hit and I really had to pivot and I really wanted to make a bigger impact. And I just saw that that was a crucial time for me to, pivot at that time and fill a gap, a much needed gap in the toy industry.
Okay, so which is the doll that you first made?
Actually, it started off with 6.
Wow.
Yeah,
okay.
They're not all here, but we started off with our 18-inch doll line, our signature line. And I really wanted the dolls to feel like friends for kids. And that's why I made them at that size. And I wanted them to be soft and cuddly so that we could target, a much younger age group than what you typically see with dolls. And so I started off with Chinese, Vietnamese, Filipina, Japanese, Korean, and Indian. And we had 3 different skin tones, and that was really important for me to showcase that diversity, especially with the rise of anti-Asian hate during the pandemic.
Okay, so you've expanded since then.
Yes.
And tell me what the expansion has included.
Yeah, so one thing that I wanted to make sure was that we provided more accessibility for families. And so we have a smaller line, little Joey Dolls line. And so you see them on the bottom right here. And then we also expanded beyond Asian representation with our Mexican dolls as well. It's much, since launching, we've had such demand even beyond our Asian community that people have really resonated with our dolls and connected with the emotional feeling of feeling seen and heard and being able to celebrate your culture as with your family.
Let me ask you about tariffs, because clearly some of your production gets done overseas. I'm wondering if you've been hit by tariffs.
Oh, absolutely. So 90% of our customers are in the USA. And so tariffs was a huge challenge this year. And we had to really pivot quickly. And earlier this year, we were fulfilling everything from Canada. All our stock was in Canada. And so we didn't know what we were going to do when the de minimis rule was taken away and 145% of Chinese tariffs were going to hit us. And the moment that the tariffs came down, we took the chance to move our inventory into the US and continue moving from there. And so it has been like, pivot after pivot this year. But we're very proud that we have had that community support and to be able to continue to make an impact.
That being said, you've had another setback this year, which had to do with the rail line and a derailment. So what happened there?
So we had a shipment. We planned this, earlier to make our inventory come in for our biggest time of year, holidays, and also into Lunar New Year. And we ordered this large order, and it was coming into Vancouver port, and then would be railed over to us in Toronto. And unfortunately, it was hit by a rock slide, and our whole container was hit by that and it was damaged. And so unfortunately, we didn't have insurance on it, and it's one like something that we failed to think about as being so small, and then we've been rapidly expanding. And so now I'm actually quite glad that, it did happen. We now know about it. Now we, have the protections in place.
It's learning from your mistake.
Exactly. And then that it happened early. But, of course, one of those setbacks that we had for the holiday season, and it's not going to, be able to come back from that revenue loss, but we're still, moving forward. We're still being able to rebuild our inventory and make sure that we are fully protected going forward.
Okay, so tell me, for example, how the company has grown. Has revenue grown? Have you had more employees? Tell me what the last couple of years have brought.
Yeah, absolutely. So since last year, we have grown. We're up 140% since last year, and since launching, we've made $1.1 million in sales. And so mainly it's been me doing all of this. And so I think into next year, we really want to expand our team, make sure that we can have a fully systemized way of scaling up and to meet that demand, because inventory has been our hugest challenge to be able to, we're continually out of stock. So I think being able to meet that demand is going to be our biggest challenge.
And the website address is?
joeydolls.com.
Very easy to remember. Samantha Ong, thanks for joining us.
Thank you.
Happy holidays.
Thank you.
All right, straight ahead. Canadians have weathered a lot this year, but in 2025, workers seem to be making the biggest noise. Back in a moment. Canadians have been through a lot this year, but in 2025, workers seem to make the biggest noise. From stalled flights, delayed mail, to empty classrooms, strikes erupted across the country. CTV's Kathy Lee has more on the labor unrest and why so many workers are saying enough.
The soul of Canada's workforce rose to the surface on picket lines marked by tired feet and a demand for something better.
We're striking to keep good service and to keep good jobs. We will be here until we win.
Years of built-up frustration spilling into the streets from coast to coast. A chorus of unrest, grounded flights, slowed mail delivery, and emptied out classrooms in Alberta.
We're in a place where we've got a broken system. It's sick. It's been death by 1,000 budget cuts.
The summer of labor unrest begins on August 16th, with more than 10,000 Air Canada flight attendants walking off the job for 3 days after a new negotiated agreement with their employer fell through.
Starting flight attendants now are making $1,900 a month in an area where rent is $2,000.
In addition to wages, at issue, employment conditions, work rules, and unpaid hours.
We're not paid anytime the aircraft is not in motion.
Pay, one of the sticking points behind the 2-week nationwide postal strike on September 25th.
Fair wages, improved health and safety, expansion of the public service, and a right to retire with dignity.
Workers also motivated to go to the picket lines after the federal government announced an end to door-to-door delivery in an effort to save a struggling Canada Post. The disruption impacting many businesses relying on the delivery service.
There's been some delays in sending out packages, and we have had to use alternative services at times.
We've essentially just have lost confidence in Canada Post.
And Alberta teachers losing confidence in the education system.
Why does Alberta, the richest province, have the poorest funded classrooms?
Tens of thousands of educators walked off the job on October 6th, wanting better wages, more support, and smaller classroom sizes.
Having to teach 37 grade 6 kids, it's too much.
We are burnt out, we are broken, the kids are not getting what they need.
Only to be forced back to work 3 weeks later after the province invoked the notwithstanding clause, overriding some rights and freedoms to pass the back to work legislation.
This has been the longest education strike in Canadian history. We were looking for a way to bring some finality to it.
The move galvanized students province-wide to walk out of their classrooms.
We're not walking out because we don't care about school. We're walking out because we care too much. We care too much to stay silent.
The students here are angry. You could really feel the emotion in the air because their teachers aren't able to strike. They've taken matters into their own hands, and they want the government to listen. They want to be heard.
Pay our teachers and give us the education we deserve because this isn't fair.
An expert says the level of recent labor disruption and strike activity across Canada hasn't been seen since the 1980s.
Workers engage in this kind of labor activism when they've been pushed too far, when they're fed up. And so they start to push back. I think what we saw in the last couple of years is a significant shift in workers' ambitions. They wanted more because of COVID, followed up by inflation. I think that really ramped up workers' expectations.
And although the strikes have caused chaos, public support for workers remained strong, even among hundreds of thousands of stranded Air Canada passengers.
I think it's okay for these guys to keep fighting.
They're asking for the bare minimum, and I think that they deserve what they're asking for.
As for what comes next for the labor unrest, no one can say for certain. But experts believe this year wasn't an end, but a beginning, a workforce finding strength, and a movement that will carry on. Kathy Lee, CTV News, Calgary.
It's a tentative agreement that could turn the page on a tumultuous chapter of labor unrest. Canada Post and its union representing postal workers announced they found some common ground. However, there are still many questions about the future of the ailing Crown Corporation. CTV's Scott Hurst reports.
Labor unrest between Canada Post and its union representing 55,000 postal workers and uncertainty about the future forced this Toronto small business to make a choice.
We had to go a different route this holiday season.
Retailer Province of Canada ships clothing across the country and by turning away from Canada Post is now relying on multiple carriers to fill the gap.
After last year's strike and then this September, we just didn't feel we had the confidence to go into the holiday season with them again.
But a tentative deal between Canada Post and the Canadian Union of Postal Workers announced on Monday may at least provide some stability.
So on the one hand, short run, good news. In the longer term, it doesn't solve the underlying structural problems.
Canada Post said the agreements include a 6.5% wage increase in year one, a 3% hike in year two, and increases matching inflation in years 3 through 5. They also include enhanced benefits and a weekend parcel delivery model, which had been a key sticking point in negotiations.
They are still bleeding. They are hemorrhaging incredible amounts of money. So they're a long way away from where they have to be. They've got a huge job ahead to become more dynamic and productive and competitive.
And maybe that will be enough to win back at least this Toronto business.
I think until this gets fully sorted out properly, then we can maybe reconsider going back to them for next year.
CUPW's national board is recommending its members accept the deals. Ratification votes are set to take place early next year. Scott Hurst, CTV News, Toronto.
And a reminder of how we ended the day on Bay Street and Wall Street, of course. North American markets closing early for Christmas. The TSX dropping 58 points today to 31,999, so just under that high of 32,000, which it hit just a couple of days ago. The S&P 500, a 22-point move up, 0.3 of 8%, and the NASDAQ, a 51-point gain today, taking it to 23,613. That does it for us here at BNN Bloomberg for a couple of days. Thanks for joining us. Have a good holiday season. We'll see you back here soon.